Women are arguably said to be the most influential economic force across the globe in the next decade. And if companies are serious about seeking out growth markets, then this is one they should be targeting. This is the conclusion of the Finweek cover story this week, which unpacks the South African SHE-Conomy. To help us unpack this further, we've got a panel of female guests, excluding Mark, of course. Jessica Hubbard from Finweek, Kim Dancy, Head of Policy, Regulation and Consumer Empowerment at Finmark Trust, and Shireen Chengadu, the Executive Director of Academic Programs. So Mark, finally doing something of a serious nature. We've done craft beers, fast cars, and finally we're getting something important.
Women.
Yes,
there we
exactly.
go. No, I mean, so the idea for the article started about 4 or 5 weeks ago. I was actually sitting having a drink with one of the women who heads up communications for Tupperware in South Africa, and I've always just kind of laughed at this idea that you kind of these little Tupperware businesses, and it's more like the board housewife thing. And very interesting, she said to me, there are some people that are making between 1,800 and 20,000 rand a month selling Tupperware. And I said, it's impossible. There's no way there's an economy that size in South Africa. And she said she can prove it. And it's not just sitting in the sand, and it's not just somebody who's able to tap into what's there. But there's actually, these are in the outlying, there's Limpopo, Northern Cape, Eastern Cape even, they've got big distributors there. And I said, you know, this is something really interesting. I couldn't believe the size of it. And I think it's quite relevant because, you know, there are a lot of, let's use the First for Women example. You know, there are a lot of products being geared toward women, but businesses are increasingly having to consider this as a target market. I mean, we can joke about how they control the purse strings in the house, but it's becoming a situation where they're genuinely not just controlling the purse strings and managing the budgets, but they're actually serious about, you know, they're actually their career. There's no longer this glass ceiling that's there. They run businesses, they manage a very big spend, and you know, it's a serious economy.
Well, I certainly relate to the Tupperware story because my grandmother, in fact, was one of the founders of Justine here in South Africa, and was the breadwinner in the family and made a lot of money and was very successful as a result of that case study and case model, really, rather, that worked. But Jessica, you wrote the article, so tell us about the kind of views in terms of contribution that women can make to the South African economy.
It came out very strongly that women are very much still on the periphery of the economy, but there is massive potential. So in the States, women account for about almost 5 trillion of spending power. And locally, although there's no number, it's probably very small compared to that. The same company that came out with those numbers found that if female employment levels rose to male employment levels in certain countries, they came up with a number that this could contribute to GDP. In the States, they could contribute 5% to GDP with an equal number of employment. In South Africa, that number could rise to 17%, which is a massive increase in GDP. But unfortunately, we're not harnessing the potential of women in South Africa just yet. They're very much on the sidelines.
So, Shireen, why aren't we harnessing the potential of females in South Africa and the contribution that we could make 17% increase in GDP?
Correct. Yep. So yes, we are harnessing the potential of women, but not fully. And I think that is the operative part of the discussion this afternoon. Is, as you rightfully said, Jessica, a large extent of the women who are in the workforce are still seen to be on the periphery rather than the mainstream economy. And yet, even in Pravin Gordon's message to the nation yesterday, we are facing serious deficit and far more than we had envisaged. If we bring women into the mainstream economy, we can start to see a closing of the gap of that deficit and a significant contribution to the GDP of South Africa. We cannot, frankly, afford not to tap into the full workforce. 52% of the country's population are women, and yet only 43% of that contribute in some way, informal or formally, to the economy of the country.
Certainly is interesting. Also, one of the stats, 47% of total households are led by females. That was in 2012, up from 33%. So women more and more becoming the head of the household and making important financial decisions. So Kim, just talk us through your views, and of course you come from you have a view more on the informal sector and the role that women play in that part of the economy.
On the lower income side too, yeah. Just to take Shireen's point, what we find is financial services in the lower income sector are very much in the informal financial services. So a woman in a lower income or perhaps peri-urban or rural environment would engage quite extensively with financial services, but tend to be in the informal side. So from a macroeconomic perspective, we've got the problem where that money is sitting outside the formal economy. So how do we bring it into the formal economy and then address some of these macroeconomic concerns that we're talking about?
So what is your approach to that? What is your understanding of how the best way is to do that?
Well, to a large extent, those financial services in the informal sector work. Savings and credit groups work, stokvels work, burial societies work. So the challenge in part is to create products that are appropriate, that overcome some of the challenges like, it's bleated about all the time, bank charges, but it is an issue. The documentation required, it also is an issue. So these are some of the challenges that face an entry from an informal financial services behavior to a formal financial services behavior. On the other hand, women are 69%, according to our FinScope studies, 69% of women are banked. That's relatively high. But on the other hand, SASSA, the social grant payments, account for quite a bit of that figure. And it's not a real financial services engagement. It's much more, my money, my social grant is being paid into my account and I pull it out as a once-off withdrawal.
So are we seeing the formal financial services institutions getting involved here and targeting the sector actively?
I think they're trying. If you look at many of the banks, they've really tried to look at products and services that go into that market. And the advent of mobile banking has given opportunities beyond what could ever have been imagined. I also credit the Mzansi account, although not necessarily a successful product in itself, but I do credit the account as having given the focus to low-income individuals. So I think banks' formal financial services sector is trying. I'm not sure they're succeeding yet, but they're trying. And part of our role is to try and make that conversation between what they are trying to build and what is actually happening there easier.
I don't know, why is it appropriate to have a specific insurance product for a female? Why do you need to have gender products? Why do you need insurance products? What else is there? Bank accounts specifically targeted at females?
Well, I think if you think about a lot of the products that are designed, they're designed by guys. They're sold to guys. The idea has always been guys are the primary breadwinners, and I'm telling you, it's a very, very generic, simplistic comment. But essentially, a lot of financial services. You can go look at the U.S. banking sector. It's primarily male-driven, high risk, and the idea of leverage is there. The idea is you're actually playing with somebody else's money. And I think that if you look at the products that are being structured specifically for women, they treat it as your product. The women are there looking after family. They've got a different set of profile, a different profile for it. But of course, it doesn't have the same attractive payoffs that traditional investment products may have if they were aimed at a sort of a hard-running male demographic. And I think that's quite an important distinction to make. Is what's that money actually going to be used for? And I guess, one of the questions I have is how do you unlock that money that's there? We forever taking the Stokvel example and saying there's billions sitting there, and the asset managers sit there and they say, if only we could get our hands on that.
So Mark, don't you think it's a question of trust? Or is there a regulatory factor that keeps them out? Is it a question of trust, maybe from past experiences?
I agree.
Going into a bank and having the door constantly slapped in your face because there isn't the appetite for risk on the bank side when there's a need for a loan. So as a result, microloans and the schemes that you talk about that are so successful. So I think it's not as simple as saying that there isn't a way of getting in. It's actually, how do you get in? How do you actually tap into that sector in a way that shows you actually understand that sector?
I agree, and I think that's exactly the problem. Is that products have been very commercialized. There's no appreciation of relationship anymore. That's the problem with financial services. I think is that we've stopped worrying about relationships. We can go that's you look at the Kiva model, for instance. Kiva is a perfect example of being able to get microloans, proper microloans. I'm not talking about the 22% interest microloans that really stimulate an economy, and they have a real, if it's buying 10 potatoes to be able to run a business, to start a retail business, whatever it is, there are products that are out there, but those are based on trust, which, to your point, don't exist anymore.
And in addition to that, depends on which research you read, because there's such a variation, that between 60 to 80% of women could have the purchasing or control the purchasing power. And so if that number is so huge, and that women have such a significant role in actually making purchasing decisions, surely we need to change this model on its head. And we stop thinking that there's a product designed for men and it's worked for a long time, but how do you actually start to switch that? So it calls for major mindset shifts as well.
Yeah, I mean, Jessica, just from the article, there's an indication that, for example, marketing companies, advertising companies, large multinationals have specific focus on how do they do that? How do they start targeting female consumers?
There has been a shift, and it seems almost as if the marketing and advertising worlds are a little bit ahead of the game here, because they realize the immense value in the money that can be made. I mean, I think women now have a global spending power of 20 trillion, and that's forecasted to get to 22 trillion. So they recognize that, and they're moving on it. They have segments designed for women, but it seems the financial services sector is a little bit behind. I mean, they're not recognizing to go back to your question, why should there be different products? I mean, the needs in many cases are inherently different. When it comes to retirement products, women do live longer in most cases, and for example, they are inherently more vulnerable to critical illness. Discovery Life came up with the stat in 2011 that more than half of the claims made by women were cancer related, whereas for men only 30% of those claims were cancer. So the needs are different, and financial services need to start taking into account and designing products specifically for those needs.
Yeah, I mean, Shireen, maybe this is probably your area of expertise, but I mean, South Africa has a very closed economy as it is. We don't have a very transformed economy, whether it's by gender or by race at the moment. I think we have a very, very concentrated, and we can bank bash if we want. There's 4 banks in South Africa. They're still traditionally run by guys. There's very little, and we all know the stats about the JSE in terms of the number of women coming through. We don't have women-led businesses, and we have very few traditional role models that people can, and I mean, that's why I love going to the Gibbs forums. Often you see the most amazing people that you would never see make it into mainstream media, because the businesses they're running, Manpower, for example, is somebody that's sitting there running a very, very powerful and successful business, and nobody knows half the time that these people are there.
I think you make 2 critical points, Mark. One is about the role models, and the second part is about whose stories are we telling? Who sits around these studio tables telling their stories? And by default, we go to the people we know, whether they're the JSE listed 4.4% CEOs who are women, or we go to the names that we know who are entrepreneurially successful. So instead of using that model because it's worked so well in the past and we know we're going to get great stories out of these, let's look at those stories that have gone through the knocks, have failed, and have actually come through with a great success story. So I think also the role of media is important in telling the stories and in capturing different voices.
Yeah, Kim, just give us your view on that firstly, and also what you find women do with their money that they earn. I mean, do you find that they're quite financially savvy in the informal sector?
I do. I find women financially very savvy in the informal sector, and it's almost the poorer you are, the less income you have, the more savvy you are, and for obvious reasons. I mean,
is it gender specific?
I think to some extent when we're talking that low, on the lower LSMs, yes, it is gender specific, because very often what will happen is even in a woman-head household, obviously it's both sides, but where there is a man and a woman who are heading the household, she will be spending on the food and the children's education, and he's probably possibly employed, and then spends on, perhaps he has a bank account, his salary goes into a bank account, probably livestock or longer-term insurance type products. Whereas she will look after the day-to-day. So very often she has to make that money last. I mean, one of the things we found is that it tends to be more women who go to loan sharks than men, because come the end of the 3rd week in the month, you've still got 1 more week till some income comes in, and you haven't got money to put food on the table. And very often you'll go to the loan shark for that, because what bank gives you a product that's going to give you 1 week a loan for a week? So in a sense, understanding how the cultural differences, the lifestyles, and then perhaps looking at products that are appropriate. If I know that I need 100 or 200 rand just to put food on the table the next week, I know I'm going to have to go to the loan shark, and I know I'm going to pay a very high interest. I know, it's not that they don't know, but they know it.
Yeah, well, unfortunately we've run out of time, but of course certainly an interesting conversation, one that we'll continue to have. 52% of the population in South Africa, females, and could contribute 17% more to GDP. But thanks for coming through. Kim Dancy, Head of Policy Regulation and Consumer Empowerment at Finweek Trust, and Shireen Chengadu, the Executive Director of Academic Programs from Gibbs. Time now for a quick look at the Finweek Trade of the Week. Well, this week Mark's got a sell on the S&P 500, 1,514 points. And of course, it's been a great year, 6.2% gain so far. So why are you selling?
Well, I mean, I think, look, going short in the current market is an absolute nightmare. I think most people everyone knows something is coming, but, you know, you befriend the trend, you stick to what you know. And I mean, I don't know if you've got a separate view on this, but, you know, S&P 500 is, if you're on a forward price to earnings multiple, is one of the most expensive in the world. It's had a phenomenal...
Well, what's your number there that you've got?
I mean, you're basically looking at, I think it's sitting just over 20 times earnings as an average. But more importantly, they've got the Case-Shiller method, which basically says the historical long-term level is 15 times earnings. It's now sitting at 22. You know, it's had a phenomenal run. Citigroup says all the investors at the moment are euphoric. And you know, Japan is a poor example. We talked about Japan and the Nikkei because they've obviously had a lot of false stimulus coming in. The US is different though, because they've now said quantitative easing is starting to come out of the system. Yesterday, actually, surprisingly, they didn't let the tax cuts get put off further. So $85 billion in tax cuts are now being taken out of the market. You know, that affects schools, the army, the guys. Yeah, that's money that's not going straight into the community.
Yeah, they say it's going to chop off 0.5% from GDP in the US.
Exactly. So I mean, I think, you know, you have to start thinking maybe it's just a bit of downside protection, but I think I think things are looking quite choppy.